Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is March 13th, 2024. This is the morning Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Looking at the euro versus US dollar on the 4-hour chart, Monday was spent moving to the downside, and that move to the downside did come down to retest the 50% midpoint of the move down from the December high to the February low. That level comes in at 1.0916. Holding that level kept the buyers more engaged, and the price moved higher off of that level. In trading yesterday, however, the price did move lower, and that moved to the downside, helped by the higher than expected CPI data. Saw the price move below the 50% midpoint again at 1.09165, but the market could not sustain the momentum. The price ended up moving higher into the close. In trading here today, you see these little bars right here. Remember, this is a 4-hour chart, but these little bars through here, that was the trading range coming into the U.S. session. Only 11 pips, so folks, or the euro versus U.S. dollar. That ain't a hell of a lot of pips. So in the early U.S. session, we have seen an extension to the upside and more than doubled the range. It's now up to 28 pips for the pair. Yippee! That's still well below the 22-day average or month trading average, somewhere in the 50s. So there is room to roam in this pair. And what we are seeing is a little bit more bullishness being above the 50% retracement, being above this swing area through here, which comes between 1.0924 and 1.0932. And if the price can stay above those levels, you got to tilt the bias more to the upside. I know it's frustrating to go below it and then back above it, but that's what happens when the market is unsure of which way it wants to go. It hangs around something like the 50% retracement level, but tilting above that level is something somewhat positive, or a little tilt to the upside or to the bullish side for the euro versus US dollar. Next target on the top side comes in at 1.0969. As long as the price stays above the swing area, above the 50% retracement level. It's as simple as that. Let's take a look at the dollar versus yen, and again, we'll look at the 4-hour chart for this currency pair. And if we take a look at the move down from the high price to the low price that we saw at the end of last week, and I guess the low price that we saw earlier this week, because both of them were one and the same, around the 146.47. The price extended to the upside in trading yesterday off of the CPI data and came up to test the 38.2% retracement of this move to the downside. So that was somewhat positive or positive for the bears, I guess, in that the corrective move came up to the plain vanilla corrective line at the 38.2 and then rotated to the downside. However, that move back below this 100-day moving average, by the way, that's this blue line in the chart, could not be sustained. And as you can see, the last bar of the dollar versus yen has been able to hold support above that 100-day moving average. And that's going to be our barometer for trading here today and going forward. As long as the price can remain above the 100-day moving average at 147.72, the bias remains more to the upside. And we'll look toward the 38.2% retracement level right here at 148.15 is the next target to get to and through if the buyers are to take more control. So like the euro versus US dollar trading above and below technical level, a key technical level like the 100-day moving average. By the way, we held that level here and here, back here. So there is a history. Admittedly, we went below it, above and below it here. But you get the idea. If as long as this price stays above the 100-day moving average, the bias, you got to tilt the bias more to the upside with the work to do getting above the 38.2% retracement again of the last move to the downside. Finally, let's take a look at the sterling versus US dollar. And again, I'll look at the 4-hour chart of this currency pair. And what we're so familiar with in this currency pair is this red box. This red box runs from about the 125.94 level up to the 128 level. And this is where most of the trading action took place over this entire period here. Again, this is the 4-hour chart. So each of these dashed lines, these vertical lines represent a week's worth of trading. So that's a lot of weeks. And what we did see a few weeks ago was that the price started to once again bottom against these levels right through here. That gave the buyers a go ahead to push to the upside, and that took the price above the high of this swing area. It looked like we're finally breaking to the upside. But in trading this week, we saw a rotation back down into the high of this swing area, this yellow area right here. In trading yesterday, the price fell below that level off the CPI data. And we were back in more into the meat of the red box. But since then, we are seeing a rotation back to the upside and trading here today. We did extend just a little bit above the 128 level. That's always, difficult when you just go above that level, but we since rotated back to the downside. The current price trades at 1.2797, just below the 128 level, so it's not like we're running much to the downside. And this low price right here, this low price stalled against these high prices right through here. We're at 1, 2, 3 different high prices right there that forms this little ceiling through here and here, so holding that level may keeps the buyer certainly in play for the sterling versus US dollar. If we get above the 128 level and stay above that level, it's going to be more bullish for this currency pair. If we move below the 127.71 level, then I would expect more sellers to re-enter into the market for the sterling versus US dollar. So there you have it. Look at 3 of the major currency pairs. To kickstart your trading day, my name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.